Welcome to the CFA Society India podcast, where society members engage in conversations with industry experts to bring you unique insights. This podcast represents the views and opinions of the originally featured speaker and is posted with their express consent. The podcast is meant for educational purposes only. It should not be construed as research, recommendation, solicitation, or investment advice by CFA Society India. Now, let's dive into today's episode.
Hello, everyone. Welcome to the CFA Society podcast. My name is Labanya Prakash Jena. I am the host of this podcast. As we know, climate change is threatening the stability of the society, the economy, and the financial system, and it forces everyone to take the right steps to mitigate and adapt climate change. Countries across the world, economies across the world are transitioning to something called green and sustainable economy. So this transition is also creating a massive investment and lending opportunity in the next 3 decades. But on the way, there are several challenges. Today with us, Neha Mudaliar, who has more than 2 decades of experience in the field of investing, investment banking, and consulting in diverse industries ranging from financial institutions to clean tech to manufacturing and technology to social sector enterprises. Currently, she is a vice president, head climate financing at Northern Arc Capital, looking for opportunity in the space in climate change, but only in the emerging market. Neha, welcome to the CFA Society podcast. Thank you very much for agreeing to join our podcast. We know that India is transitioning to a green economy rapidly, and it is attracting a massive amount of capital to green sector, although we have a long way to go. So can you talk about what green finance means for an investor? What is the current state of green finance in India?
Sure. Thank you so much, Labanya, and great to be here. Very happy to share my thoughts on climate financing, a sector I've been working in for more than 15 years and something which I'm deeply passionate about. Labanya, like you mentioned, green financing is still a nascent and evolving sector in India. And for the purposes of this podcast, I've relied on some of the reports, namely the Climate Policy Initiative report of 2022 and IFC's report on blended finance on climate financing as well. There's also a report which I co authored with the Bharati Institute of Public Policy at ISB, sponsored by EDF, which I hope should be out soon, which talks about the climate tech financing landscape in India. Lavanya, like you said, let's start with what is green financing. And a lot of people, limit green financing to financing for renewable energy. And so think about large solar parks or wind farms. However, climate financing, relates to mitigating and adapting to climate change. And so when I think about climate and green financing, it's really a theme which cuts across, in the most basic sense, the air we breathe, the clothes, products, services we consume, where we stay, how we move, and the whole infrastructure around it. So, green financing includes financing not only for clean energy, it also includes financing for transportation, sustainable and energy efficient manufacturing, agriculture, construction, circular economy. Another sector which is often ignored is water, and then eventually, of course, carbon capture as well. If you talk about climate adaptation, it is again very broad since we are still understanding what are the impacts of climate change. I think it is really about all the investments which will help us adapt to the adverse effects of climate change. To give you some examples, interesting examples I've come across is things like drought resilient agriculture, resilient infrastructure in terms of houses, roads, communication. So some of those again would come under green financing and under adaptation of climate change. In terms of the global context, India contributes to about 7% of greenhouse gas emissions, and we are the third largest emitter in the country. Now, India has made significant contributions to reduce the carbon intensity of the economy. However, in the near future, our emissions might keep on increasing given that we are one of the most rapidly developing countries in the world. And of course, we have the largest population. So, given this, I think India will play a very critical role in the fight against climate change. So, I think India also has the very delicate balance of looking at climate while ensuring economic growth and decent quality of life for the current and future generations. So I think, with that context, India needs about $170 billion annually to meet its climate targets. Currently, in FY 2020, which is the latest numbers I have, we got about one fourth of that at $44 billion. The International Energy Agency estimates that India's annual requirements are going to increase to about 250 to $260 billion annually by 2060. Again, to provide some color on the 44 billion which got deployed in climate, about 42% of which is the largest chunk went into clean energy. About 39% went into energy efficiency. And your energy efficiency is very broad. It includes green buildings, it includes energy efficient appliances, it includes energy efficiencies across processes, and about 19% went into clean transportation. About 83% of the funding came from domestic sources. And if you look at climate adaptation, the number was about $5 billion, and almost all of it came from the government. So again, to re-emphasize, the gap is massive. About three-fourths of the needs of climate financing are not being met today. But what that also does is that represents a massive opportunity for investors across various financial instruments, and look forward to talking more about that now.
Thanks, Neha. As you rightly mentioned that capital is not flowing to the desired or expected amount to achieve India's NDC target or net zero target. It means that the intervention from the government is very, very critical. So in that context, I can see that India government is promoting green finance. So I can see new initiatives, new regulations coming from SEBI, from RBI, even there are schemes and programs which are coming from the central government also. So can you elaborate how the Indian government been promoting green finance and what impact of these initiatives on flowing capital to green sector?
Sure. Thank you so much, Lavanya. Like you rightly mentioned, the government of India is doing a stellar job in really promoting sustainable and green growth. And is really looking at it from a very holistic manner, not only limited to finance, but really promotion of specific sectors within the green economy. So, some of the examples of kind of policy initiatives in the recent days have been, promotion of rooftop solar with the Pradhan Mantri Suryodaya Yojana, energy security for farmers with the PM Kusum scheme, promotion of local capacity in solar manufacturing with the PLI schemes, biofuels and bio CNG through the Satat scheme, and the mandatory blending requirement. If you look at transportation, the EV mobility through the FAME subsidies, green hydrogen, again, a sector which will really help us decarbonize the industrial and manufacturing sector through the green hydrogen mission, green buildings through the National Building Code and the Energy Conservation Building Code. And finally, Mission Life, which, again, does not get its right dues, but I think really about talking to each of us to kind of have a more sustainable lifestyle. So each of these, in the context of financing, each of these programs have some form of financial incentives which have already been built in, like subsidies, viability gap financing, guaranteed offtakes, or creating markets through regulation, like the mandatory blending requirement of ethanol, basically creates a market where there has not been one so far. So these are some of the schemes which the government has done. Lavanya, like you mentioned, SEBI has come out with the green debt securities definition, which not only considers green bonds, but also looks at subsets like blue bonds, yellow bonds, transition bonds. RBI has also come up with the framework for acceptance of green deposits, which I think is a great thing and needs to be talked about more, where we are talking about retail participation in the green growth of the country. In this context, India issued its first sovereign green bond of almost 16,000 crores, which was oversubscribed. And this came at a 5 basis point discount to our risk-free return. So again, demonstrating that there is kind of capital available, which is willing to kind of come at a slight concession if you are targeting green use of proceeds. Now, of course, in the recent past, I think we've seen some challenges with that, but I hope that's just a blip. And in the long run, investors and climate financing is flowing to the sector. Finally, I would really like to emphasize, the role which public sector enterprises are playing in the sector. And again, this is government funding, right? So, like SBI, the largest bank in the country, was the first to look at, SBI NEEF, the Climate Tech Fund, which has invested in remarkable climate tech technologies in the country, and has now launched SBI Fund NEEF 2. SIDBI, which has been promoting, and providing concessional financing for various sectors, including EVs, rooftop solar, energy efficiency in the MSME sector. And then some of these large established infrastructure players by the public sector like IREDA, NABARD, REC, NAFID, NIIF, each of them directly or indirectly contributing to sustainable infrastructure in the country. So again, I would like to emphasize that government is taking all the right steps. The sector is still nascent, but the foundation has been built to promote green financing in the sector.
Yeah, thanks, Neha. Yeah, I can see that the kind of opportunities the government has created, particularly building an ecosystem where private sector and private investors can thrive. So, in related to that, you also said that opportunity across the across the green segment, including clean energy, clean transportation. So, could you please elaborate the investment opportunity in the entire value chain of green sectors, starting from clean transportation, clean energy, to smart agriculture as well?
Sure, sure. No, thank you so much, Lavanya. And the way I've thought about, the investment opportunities in green is really, I mean, you spoke about it based on sectors. I've really looked at it based on the profile of investors. Because the investment of opportunities differ massively across the different sectors, because the risk return profiles are very different and the sectors are at various stages within climate investing. So if I break it down in the investment opportunities, let's first talk about investment opportunities for the Indian corporate sector. Now, I really believe that this is the time to invest in greener technologies by corporates to make their products and operations greener. I think this will not only lead to better efficiencies in the long run, but is also preparing them for the future and opening up newer avenues for growth and exports. And this is something which I've kind of struggled with a number of times when I've spoken to corporates, in the sense that, can we get concessional finance? What is in it for us? But I think if we look at it more from a forward looking perspective, this is a necessity now going forward. With CBAM and other regulations coming in into Europe, if you have to be competitive in the global markets, you have to look at investments in climate and greener technologies. As a precedence, just to give you a perspective, about 52 of the large Indian corporates committed to science-based targets for net zero by 2020. This is a study which was done by CDP, a nonprofit that runs, global disclosure systems. However, if you see out of the 44 billion, which I mentioned is the climate financing which flowed into India, only 3% came from large corporates. So again, I think there is as the capex cycles are turning and we are hoping to see a lot more capex investments by corporates. I think as each corporate thinks about this, I hope they make the choice to invest in cleaner technologies for the future. The next, profile of investors is the banks and financial institutions. Now, given the risk profile of this category, right, and the fiduciary responsibility they have to the depositors and people providing this capital, I think the sectors which are most attractive in this category are really sectors which have reached positive unit economics, have low payback periods, limited technology risks, and support from strong sponsors and equity players. So, in that sense, I think the sectors which are most suited and where we are seeing most of the financing going is really solar rooftop as well now, and EV mobility. So in the context of financing, about 32% of the 44 billion actually came from commercial financial institutions across these sectors. If I look at private equity investors as the next category, now this is where we're seeing a number of interesting innovations happening which are funded by investors. Now, a report by Unitus Capital says that about 310 equity investors made a climate positive investment in the last 2 years. And this is a report in 2020, and this number increased by 40% from the previous year. So definitely, I think we are seeing equity investors also coming into the sector, and this is such a welcome change. I started my career doing private equity raising for climate enterprises, and frankly, out of the 10 conversations I would have, maybe one might have looked at the sector, and today I think that narrative has changed significantly. I think here people are looking at very interesting innovations across various sectors. So of course, mobility remains a play across the value chain. So across battery technology, charging infrastructure, battery swapping models, but also very very interesting innovations across agri-tech, logistics, efficiencies across the supply chain, circular economy, recycling of plastics, recycling of batteries, waste to energy, and also broadly tech plays in terms of monitoring, evaluation, geothermal technologies across the climate sector. So I don't know if I answered your question, but really wanted to look at it from kind of various investor classes.
Yeah, thanks, Neha. You just highlighted the source of capital, basically mapping the kind of technologies we need with the characteristics of all these various kinds of investors, starting from banks, financial institutions, private equity player.
Yeah.
So what we can notice actually in the green sector, mostly it's financed by, you rightly mentioned, either commercial bank or private equities, mostly abroad. But
Yes.
rarely they are sourcing capital from capital market, basically
Yes.
issuing bonds or listing themselves in the stock market. Because when we are transitioning to a green system, mostly it is capital intensive business. So
Yes.
you need long-term financing for a long time. Where I believe pension fund, insurance companies, this kind of investors can provide long-term financing for green sector.
Yes.
So could you please elaborate that how these borrowers, these promoters of green companies can go to the capital market instead of just relying on banks and NBFC?
Sure, sure. No, I think Labanya, that is a very, very important point, and I think this is something where I have felt that India as a country we can do a lot more. We've so far also contributed significantly. So 83% of the financing has come from domestic sources, but like you rightly mentioned, it's come from large institutions. And when you specifically speak about insurance companies, I mean the risk profiles are so different, right? I mean it's the pension funds, insurance funds. Here, in the capital markets, let me first talk about retail investors. Now, currently, there are limited avenues, to invest in the green financing story in India. And again, based on your risk profile, I think for the retail investors, the best bets would be the bank green deposits. And some of the banks which have launched this is the likes of SBI and Yes Bank. And here you're getting the security of the institutional underwriting of a bank when you are investing in the climate sector. Now, when you talk about bonds and the other capital market instruments, given that the framework of the green securities got notified in 2023, I think again this is a market which is still very nascent. And I know of a number of entities which are looking at green bond issuances and are in the process of kind of preparing and listing for that. So I think the market will definitely evolve like it has globally. And here we are not only talking about green bonds, we're talking about things like transition bonds, sustainability linked bonds, impact bonds. So there is a wide range of bonds which might hopefully be available very soon, given that the foundation has been set for that. Here again, I think since this is a podcast by CFA, I think when people do look at investing in these sectors, please remain cognizant of the overall rating of the entity and the bond ratings as well, because they will be better kind of structured securities compared to direct lending, but there will be kind of risks which people should be cognizant of. Um, I think one sector which I'm very excited about, and I think there is huge potential, is municipal green bonds. And we've seen globally, three countries or cities, sorry, having raised this in terms of Cape Town, Toronto, San Francisco, and I think here again there is a huge potential as we've seen some of these municipal corporations in India, like Indore, Surat, doing stellar work in sustainable kind of infrastructure development at the city level. So I think we could also look at some of these coming in the near future. Where in the past as well, municipal corporations have raised bonds. We hope that there will be more bond issuances from a thematic city level issuances as well. So I think those are some of the kind of opportunities which I hope will be available soon. Today, it is a very, very nascent market when you look at green financing in the capital markets.
Okay, and thanks, Neha. From the beginning, we also discussed, okay, the amount of capital need. I mean, if we see that net zero, people are saying it will be in the range of 10 to 12 trillion of capital required in the next
Yeah,
3-4 decades. Nobody
yeah,
knows actually how much capital we need,
that
but
is
definitely a massive amount of capital. Even in the
yeah,
short term, also till 2030 to meet India's commitment, 500 gigawatt of renewable energy. It means that you need at least 40-50 billion dollar only for renewable energy sector in the next 6 years.
that is true.
But the capital is flowing is significantly less. So why
Yes,
it's challenging for promoters, for companies in the green sectors to mobilize capital.
sure. No, thanks, Labanya. And I have grappled with this myself as well. I think for people who are very passionate about climate, I think it's been a struggle, frankly. And I think things have really evolved and things are changing now. But I think climate suffers from some of the challenges which most new and evolving sectors focus on, or kind of struggle with. So one is in terms of the limited scale of operations today. So when I talk to some of the large kind of investors, either equity or financial institutions, or even like you mentioned, Lavanya, in terms of insurance companies, pension, they require to invest at a certain scale and size, and they need to see success stories, which gives them confidence to then invest in the sector. And I think, given the current scale, there are limited investment opportunities at that scale, and limited, large success stories, and I mean, in today's day and age, we talk about unicorns and other things, right? So from that perspective, we've seen limited market or business models which have really scaled up significantly. So I think that is something which we hope will change soon, but has been the challenge so far. I think second, and Labina, again, you mentioned this, is that there is a high capex requirement in this sector. So unlike some of the other sectors in terms of technology, in terms of financial inclusion, SaaS, these are sectors where there is definitely a tech play initially and some investments, but you see massive returns in the long run, and the capex requirements are limited. Whereas when you think about climate, it is in a large extent related to infrastructure, basic needs, and here the capex requirements upfront are very high, and you recover the benefits of it over a period of time. And traditionally, people who've invested in these large capex businesses have been infrastructure players. And here in infrastructure players, they are not the people who are used to taking technology risks. So if you think about climate, you need large capex requirements, but you also have relatively newer technologies. And hence that becomes like almost like a double whammy in terms of who are the investor classes which would be willing to put in large amounts upfront, but also invest in relatively newer technologies. I think the third thing is, we spoke about the role of the government, and the government is coming out with a number of subsidies, incentives. But these are things which investors have not in the past been very comfortable with for various reasons. And so business models which are reliant on, kind of subsidies or incentives typically have faced cash flow issues in the past. And again, that is one of the reasons which we've not seen a lot of commercial capital flowing in those sectors. The next is, and I think this is one of the most critical points, and we've, spoken about this multiple times across climate forums, is that there is limited awareness of opportunities in the climate sector, and the ability and the capacity to be able to not only identify these opportunities, but also how do you underwrite these opportunities, right? And how do you have standards in terms of monitoring these investments, not only from a financial perspective, but from a climate and green monitoring perspective. And I think given that these things are things which are still evolving in the sector, and there are fears of greenwashing and others, I think that is another big challenge where there is a lot of interest from investors to invest in the sector. But I think the know-how of what to do and how to do it, and do it in a manner which is will give you that risk return profile, is I think something which we're still in early stages. Finally, there are various estimates which say that almost 50% of the technologies which we need to mitigate climate change are yet to be commercialized or even developed. So what that means is we need a huge amount of R&D costs to be put in the climate sector. And this here I'm relying on the study which we did at ISP, where we're saying that almost 99% of the financing for high tech innovations, right, and deep tech innovations are going in the developed markets. And even within developed markets, these are restricted to the top 10 cities in the developed markets. So where is that money going to come from? Right. And so from that perspective, and this is a struggle not only for India, but it is for all emerging technologies, emerging economies, right? I mean, we don't have the kind of wherewithal to put in large amounts of money with very limited probability of returns, and long and patient money. So here, I would think again there is a big role which corporates can play in terms of investing more in R&D, in terms of course, the government can play, but also in terms of looking at technology transfers of financing from the developed markets. And so that again, I think is a key challenge. And hopefully, we develop the carbon credit mechanisms or other financing mechanisms by which we're able to address some of these challenges.
Thanks, Neha. So coming back to you, you have rightly said that okay, there are several technologies which have not demonstrated commercially feasible, where you need patience, risk capital, and a significant amount of money to invest in basic scientific research as well. Uh,
Yes.
uh, as you spend some time in international institutions which are trying to intervene and coming out with financial innovation. So we have, like you mentioned, a discussion on transition bonds, green bonds, blue bonds,
Yes.
a varieties of institutions. And
Correct.
many Indian corporates actually have raised these bonds.
Yeah.
But there are other financial mechanism also here in India, like alternative investment fund, Innovate. But what we have seen so far, this kind of innovation has really not been very scaled up in the country, particularly attracting private investor, okay, by using public money very smartly. So could you elaborate how this financial instrument, new innovative financial model, financial mechanism can be used so that these instruments can be replicated and scaled up?
Sure, sure. Thank you, Lavanya. Um, I'll break this up into two. Traditionally, when we've looked at, market innovations or financial innovations, in developed economies or in India, it has been in sectors which are already evolved. And so what happens is most of the sectors at the nascent stage get funded by private equity or then banks. And then once a sector has evolved to a certain size and scale, you see more innovative financial mechanisms coming in, like securitization, direct assignments, PTCs, bond issuances, where then you're targeting investor class which wants more stable returns. And how do you break up the portfolio into kind of various risk return profiles and sell it to different category of investors? Now in climate, the challenges, like I mentioned, right, are very different. And here, the innovative financial mechanisms need to come in as a blend of various stakeholders within the ecosystem, right? So it's not so much in terms of innovations to get, you know, uh, I mean, we need the larger pools of capital to come in, but that will only happen when we have the various different stakeholders kind of coming in and really sitting across the table and looking at how we can come together to kind of solve this problem. So I'll give you a few examples, and like you mentioned, I was at IFC for 5 years, and one of the examples I want to give is from IFC, which was one of the last deals I worked on, in IFC in the green affordable financing space. And Here IFC lent to really people who are looking at self construction. So in terms of the economic pyramid, they're really people who are at the bottom of the pyramid in terms of looking at their first houses and self construction. And if you were to think about it logically, that would not have been the segment where you would have looked at green, right? But market surveys showed that 40% of people are actually understand the impact of climate change and were open to integrating greener technologies when they were looking at constructing their house. So IFC came about with a facility which was green affordable financing in collaboration with UK's market accelerator for green construction. We used to call it Magic, where what the facility did is it said that in the long run, this is definitely better for you. There are initial expenses which customers have to incur in terms of certification costs, in terms of market awareness, and those are things which would be subsidized by the facility, which then meant that large commercial investors could come in when the initial risks and costs were taken care of by a subsidized pool of capital, which in this case was the UK's Magic facility. In this facility, IFC is expected to support at least 10,000 green certified self built housing units, which is a huge number when you think about this being one of the first of its kind facilities. So that is one of the examples where we've seen different pools of capital come together and look at an innovative product design. I think the second example I want to give, and Lavanya, you were there at this session as well, which was hosted by IIC and India Blended Finance Collaborative, where we are talking about innovative financing solutions in the sanitation space. And across two really small towns in Maharashtra, which is Vai and Sinar, where you had a mechanism where they ensured almost 44 million liters of septage, which was treated based on a performance linked annuity model, which is called PLAM, where what you did is you got a private service provider in a service which has traditionally been done by the government in terms of waste treatment, and you linked their payments based on performance incentives. So, in terms of actual number of septic tanks cleaned, and the reason and the way you were able to monitor is by the use of technology, and to say that on a real time basis, the municipal corporations could or the local bodies could really track the number of septic tanks which have been cleaned, and the funding for this came from a local tax, which you levied, because now you have a much better surrounding, much better sanitation, and the quality of services which were so far not existent in those geographies. So again, a very very interesting example of innovative financing where you got the public and the private sector and leveraged the use of technology. You spoke about AIFs and InVids, Lavanya, and again, I think those are things which will come once the sector has evolved. uh, AIFs in specific allow you to structure transactions in a manner in which banks and financial institutions today are not able to do it for various regulations. So it allows you to kind of come up with financing structures which are more in line with the kind of cash flows of the businesses. So definitely we are seeing AIFs coming up in the climate sector. AIF debt climate, in the debt climate sector as well. We've seen a number of the innovative venture debt companies investing in the sector, like the Trifecta and others. Northern Arc, where I work, again, we've launched an AIF in the climate debt sector. So definitely, I think those are also business models which are coming up, and which will support the sector as it is evolving.
Thanks, Neha. You touched on affordable housing as well the municipalities. Actually, municipalities in India all the time they struggle to get capital from mainstream market. So there are various reasons for that. So I'm not going into that.
Yeah.
So my next question is that as we transitioning, so it's not only large corporates needs to transition, it's MSME also. They also
Yes.
need transition. And
Yeah.
as we know that MSMEs all the time, their loan applications get rejected by
Yes.
banks and NBFCs. The interest rate is very, very high. And
Yes.
here we are talking about transitioning to a green energy system means capital intensive business. At the same time, MSME, if they go, it means they need more capital to
Yes.
invest in energy efficiency, invest in rooftop solar, for example. So they
Yes.
struggle to raise capital. So
Yes.
although we can see that development capital like through SIDBI or some capital through Tata Clean Tech, they're coming only for MSMEs as well. And
Yes.
some new NBFCs, they are only targeting medium and small size enterprises. So
Yes.
what are the challenges you are looking at? How we can alleviate this kind of challenges?
Yes. I mean, Lavanya, like you rightly mentioned, it's like a double whammy. And I mentioned this in the past as well. That we are seeing a lot of MSMEs, and like I mentioned, affordable housing, people taking the leap of faith, frankly, in some sense, and doing climate and doing greener incentives, but they are already challenged with regard to low financial inclusion, and low access to financial products and services. Um, so definitely, I think there is a need to look at the overall kind of landscape here. But the only thing I would say is, I've been in the impact investing space also, for almost 2 decades, and we should look at these independently. So climate is a crisis which is going to face, climate change is a crisis which we are all going to face. So I don't think we should look at an inclusivity angle when we're looking at climate investing, because I think there are number of studies which show that the impacts of climate change are going to be felt by the poor the most. And so we should definitely, when we look at green or climate investing, look at the overall spectrum, and the people who can make the most change and the people who lead to the maximum emissions are really, the large sectors. And so we need to kind of, really very urgently look at innovations at that scale, and investments at that scale. Uh, but like you spoke about the whole inclusivity of affordable housing, MSMEs, and they struggling already, and then how do they invest in climate? Um, you know, I spoke about one of those examples of green affordable housing right now. Another example is, again, Lamani. I mean, like you said, this is EESL, Energy Efficiency Services Limited. Again, a government entity, where they're spearheading energy efficiency in the MSME sector, and looking at innovative models. So the government will have to come into play when we are talking about some of these sectors and look at concessional financing. But the need is massive across all segments, is what I'm saying. And for investors, I would urge to say that, look at climate as an independent sector, look at green financing as an independent sector, and look at investing in the sector across the value chain. And MSMEs, definitely it is challenging. It has been challenging, but there are a number of financial products and incentives and, sources of capital which are available today. So in terms of simple examples, in terms of, the yields, we've seen the yields reduce in the MSME sector. Historically, we were talking about the higher teens. Now, when I talk to MSMEs in the rooftop solar segment, they are getting funding even at 12-13%. From the likes of SIDBs, but also from the likes of some of the public sector banks. So I think it's a very good development which is happening in the sector, and I hope this continues.
Thanks, Neha. I don't have any other question. So if you have any passing remark, we'll be happy to get it. Yeah. Thank you.
I think, Lavanya, this was a great session, and thank you so much, for kind of inviting me. This is a subject which is very, very close to my heart. I was being asked just before we started in terms of my personal journey, and I did move from mainstream kind of financial investments, investment banking into climate. Um, Maybe a little early, than most sensible people would have. But I think this sector and this space represents an enormous opportunity for young professionals, for professionals across different sectors. And I do hope that, we see more and more kind of investments and manpower and capacity building to happen in the sector.
Thanks, Neha. Thanks for having you in the podcast, and it's a pleasure to speaking with you. Thank you.
Thank you so much, Lavanya. Bye.
Bye.
Thank you for listening in to today's podcast. Before you go, please subscribe to stay updated on your favorite podcast app.